Hey everyone, welcome to the Your Money Your Life podcast. We're at episode 300 of the podcast. 300 episodes we've done. That's a lot. 300 every week, 300 once a week for consecutive 300 weeks. Think about that. Think about the numbers, ladies and gentlemen. And there's what, 52, 53 weeks in the year. So we've been doing this for a while. Make sure wherever you're listening, you like, subscribe, 5-star rate, and review this podcast as we keep this thing rolling. Let's jump into it this week. There's going to be a little bit of talk about the markets because there is some interesting stuff going on with the markets this week. So let's jump right into that first and foremost. We'll talk about Powell and the interest rate cut. But first, let's give a market update. Right now, futures are sliding. Some big earnings came out. We had mega cap tech giants like Alphabet, Meta, Microsoft. They reported quarterly earnings after the close on Wednesday. If you're listening to this Thursday morning, so investors are trying to understand AI spend. Investors are trying to understand how well these companies did. Google parent Alphabet shares did pop 9% on the back of strong results at first, and then they kind of cooled off. Meta and Microsoft tumbled about 9% and 2% respectively. So that was the reactions to those big tech earnings that we saw come out recently. Meta said they recorded its highest revenue growth since the first quarter of 2024, but the social media giant said that Donald Trump's One Big Beautiful Bill Act led to it to incur a one-time charge of 15.93 billion. Meta expects the law will weigh on U.S. federal cash tax payments for the rest of the year and future years. Microsoft shares moved lower after the company says its investment in OpenAI reduced its earnings by 3.1 billion in the quarter. That revelation sparked worries about ongoing AI spend. So Microsoft is heavily invested in OpenAI. They actually just said that they were going to be taking, I think, about a 27% stake in OpenAI, increasing their stake. They already had a large chunk of OpenAI equity, and now they increased that. So Thursday's futures loss were potentially mitigated by Trump agreeing to cut fentanyl tariffs on China to 10%, while Beijing delayed the latest curb on rare earth exports. So yes, it seemed like President Trump and the president of China met and they got to some middle ground and some understanding. There is going to be less, trade war talk, it seems like, after their meeting. The U.S. tariff reduction brings the overall levy on Chinese imports to 47% from 57%. As part of the deal, Beijing will work very hard to stop fentanyl and buy U.S. grown soybeans along with other agricultural goods. So again, this meeting came to a head. It had many factors involved: tariffs, fentanyl reduction, China buying U.S. soybean from soybean farmers in the U.S. Who've been having a hard time. So those topics, I'm assuming, were discussed in this meeting. And again, they did come to some sort of middle ground. It sounds like the market's not going too crazy over it. Maybe it's already baked in that they would be fine because we're about a little bit down to flat today in the early pre-market trading. We'll see what actually happens when the market opens at 9:30 Eastern. So the interest rate cut, we did get the Fed's interest rate cut, and that wasn't a surprise. So we'll talk about what that looks like here. The Fed again cut, but Powell tempers expectations. The Federal Reserve lowered interest rates by a quarter percentage point on Wednesday, but Chair Jerome Powell said a reduction in December is not a foregone conclusion. And he has to say that. He was saying, hey, we did cut here, but we may not cut in December. We'll see. We'll get back to you. But he has to say that. He's not going to say we're going to cut. He can't already tip his hand and say what he's going to do. So the market has to understand that. I think so. You just can't do that early tipping of the hand. So the latest cut brings the benchmark rate to a targeted range of between 3.75 to 4%. So as we've talked about this over and over, the Fed funds rate being lower, that will have an effect and trickle into everything else with time. And you'll see that. And so you'll see, savings rates, high yield savings rates start to go down, potentially mortgage rates at some point go down. Um, Other lending rates going down, right? So policymakers are working to support a weakening labor market while balancing the risk of inflation and tariffs. So that's what the Fed's job: support a weakening labor market, which it is weakening. We aren't going to get to the numbers here in this pod, But there was a bunch of companies this week that announced layoffs. Amazon, UPS, a bunch of other tech companies. I think I saw Meta announce them. So there was a bunch of companies that announced layoffs. And so that's a big, big thing that's going to come to head here. And mind you, we still have a government shutdown. I did a post on TikTok about this, but we still have a government shutdown with about, if it lasts till November 1st, which it looks like it will, 25 to 30 states will stop government food assistance, SNAP programs for people that use that. And so there's going to be a lot of, I would say, interesting times coming up ahead. Let's look at the chart for the YouTubers. We'll take a look at the chart. Again, you see the opening pre-market. We're a little bit lower here on the S&P ETF Trust. And again, for the past week, 5 days, though, we've had a really strong 5 days, up 1.62%. If you look at the past month, up 3%. And, year to date, we're doing really, really strong. So the market, again, is doing really, really strong. Will this be a catalyst to pull us back a little bit? Probably not. We'll see, though. There will be a catalyst at some point. I don't know if this is it. We'll see. So that's the big thing there. Let's go into some current news and see what's been going on. OpenAI has some news. They've just announced that they're preparing for a blockbuster initial public offering that could raise their valuation to 1 trillion. They could raise the valuation to 1 trillion. This is a report by Reuters, and they had anonymous sources. So the GPT developer is reportedly aiming to file regulatory paperwork as early as next year. This is after a flurry of activity that happened with OpenAI. First, they restructured the deal with Microsoft. They received California Attorney General Rob Bonta's blessing to transition to a for-profit entity. Remember, this was like a not-for-profit in its origin, and now they're turning to a for-profit entity, for-profit benefit corporation. Meanwhile, its AI partner, NVIDIA, just crossed 5 trillion in market value. So OpenAI is looking at a 1 trillion valuation. That would be I'm assuming what was the Saudi Aramco valuation when they IPO'd? Because this has got to be higher than that, right? It's incredible, incredible. So we'll keep our eyes on that, um, and see what's going to happen, with that IPO coming in a couple of years here. That's going to be a huge IPO. Meant a lot of rich people that have insiders and hold a lot of shares there. US China eased tensions on tariffs and rare earths. We just talked about this. Donald Trump, he agreed to lower tariffs on China in exchange for promises on fentanyl, rare earths, and soybeans after meeting with his counterpart Xi Jinping. And that's on Thursday. The 1 year agreement would decrease the levies on China's goods by 10% to a 40%, 47% rate. So we did talk about this, and I'm just more curious on how long it will last. I mean, again, I see it's a mutual respect, but I see negotiations, and we'll see how long this lasts. In general, it's going to be really, really interesting to watch that play out. We talked about the earnings. This is the big, big thing over this week. One of the big things, I should say, there was many. But let's dive into deeper that. Google parent Alphabet records record profit, 100 billion revenue. So they surpassed 100 billion for the first time thanks to double-digit growth across every major part of its business. This is according to the CEO. They grew 16% year over year, and Wall Street expected 13%. The company's cloud business expanded by 34%. They said they have strong momentum in cloud. The company's artificial intelligence divisions as well. Google's Gemini app now has more than 650 monthly active users. That's a lot. Let's look at their little highlights from their deck, their quarterly earnings deck. 7 billion tokens per minute, 650 million active users on Gemini app, plus 34% revenue year over year on Google Cloud, 155 billion backlog, 300 million paid subscriptions across Google One and YouTube. Pretty incredible company. That has a diversified business like none other. They seem to have done a great job here. And this is a post from the CEO of Alphabet. Meta also changed its name, its parent company name, I should say, and they had earnings that forecasts some different things. So Meta's AI spend forecast overshadows 26% revenue growth. So Meta's warning of significantly faster AI related expense growth made shares tumble. So again, they said, hey, we did well, we grew revenue, but we're going to be spending a lot on AI. The tech giant said that it had net income of 2.7 billion after a one-time income tax charge of 15.9 billion on sales of 51.2 billion. It's raised its 2025 guidance for capital expenditures, which will now come in the range of 70 billion to 72 billion. So that's the big thing there. They raised their capital expenditure, which the majority of that's going to be AI spend for them. And so that's why the shares kind of went down. People said that people really, the investors weren't really expecting that. And now they acted in kind to reduce their exposure to Meta stock. So we'll see how it trades in the open. And let's actually take a peek at Meta and Google's um, pre-market trading. And if you see on on the YouTube viewers, Meta is still down roughly 10% pre-market. And we'll see if that holds when they open. We could take a gander at Google's as well and just see how they're trading pre-market after earnings release. After the market closed one day, Google's having a strong pre-market, up 8%. So, you're seeing different things and different moves as these companies release earnings, which is going to be a big play here, right? You have so much going on. You have the Fed lowering rates as we expected, not committing, but probably will cut in December. You have the government still shut down. The government is still shut down. That's a huge deal, in my opinion. And if we get to next month, a lot of things are going to change for a lot of different people. As I did do a story on that on TikTok, and so you want to check into that. And then you have the U.S. and China coming to some sort of mutual understanding, coming to some sort of middle ground. It seems like we're getting to a middle ground. Still ways to go there, and there's going to be more rhetoric spewed from both sides, I would assume, and still more ways to go there. So that's a lot. That's a lot. And if you think about what happens with the government shutdown, I want to go back to that. Like people are forgetting exactly what happened or how it occurred. The big thing is Republicans, Democrats haven't come to a agreement on, where they want it, where money should be spent for our government, right? Like that was the big thing is there's not been an agreement on where money should be spent. There was tax subsidies that Democrats want to continue to go on into next year, but they won't if there's not a funding plan that's agreed upon here. So that's the big thing, and we'll keep our eyes on it, folks. It's going to be a really big, big discussion point going forward, especially if we don't get something done by November 1st here. So that's keep your eyes, folks. Keep your eyes peeled. That is a big one. Let's go into personal finance questions of the week. There was a few good ones that I wanted to touch on. The first one being, what percentage of car buyers say they felt pressured to purchase add-ons or extras they didn't initially want? Oh, this is going to be incredibly high. This is going to be incredibly high. 70%? I'm going to go 70%. Oh, only 34%. Add-ons and warranties and fees. Oh my, 34%. Only 34. I feel like the upsell is what a car salesman would do. You're buying a new car already, hey, just get this, get this. You don't even know what it means, get it. Man, I'm surprised by that. What percentage of branch banks offer free student checking accounts? I'm going to say that's like above 50%, like 60%. Oh, 100%. Should have trusted intuition. 100%. That makes sense. 100% actually free student check-ins. And why? Longevity. You want to lock in a student or a younger customer by offering a free loss leader product, but then your ROI, your lifetime value of that customer is going to be obviously above that loss leader at first because you're going to have them for life. Credit cards, loans, all these different things that you'll later do. That's why they do that. That makes a bunch of sense to me. Wow, folks, we just got through episode 300 of the Your Money, Your Life podcast. Make sure you like, subscribe to this. Pass this more to friends, family. Also, check it on the TikTok that we're doing with my name, Delano Sapporo, on it. We will do this every week. We will see you next week.